is mortgage application volume at lowest levels since 1996. So we're talking basically 30 years now.
With mortgages being the lowest since they've been since 1996, you have to realize since the 90s, going into the early 2000s, the 10s, and into the 20s, real estate consistently, we sell more units every year because the population of the U.S. has increased. So what they're saying is, I want you to go back to the 90s. I want you to go back 3 decades, and that's where we're at for mortgages right now. That's such a low volume. I want to dissect this for a second because this is how we want our listeners thinking. We want you thinking the number behind the number behind the number, or what's the data that causes the correlation here and how do I glue it all together? Home sales are, 3.9 to 4.1 million annualized rate. But why are mortgages so low? Mortgages are so low because the refinance market is dead. We came out of the late 10s and into COVID, and mortgage rates were dropping. They were about 5, and they went from, the 5s into the 4s and then into 3s and touched the top of the 2s. So everyone refinanced. We went through the largest refinance boom ever. And then all these mortgage companies stacked up on employees. And all my friends who are loan officers made the most gangster money of their careers. Ridiculous money. Does anyone want to refi a 7.5% mortgage right now?
No.
So the only refinances that are happening are forced. They have to do it because of, a forced life event, death, divorce, loss of job, blah, blah, blah. So that refinance market is dead, but also we know the purchase market is down 30%. I spoke with one of our loan officers today, and he was at a lending event last week. And he said, did you know in Q2, when mortgages peaked of 2022, there were approximately 181,000 loan officers across the United States.
181,000?
Yes, 181,000.
Wow.
What do you think it dropped to in Q2 of 2023?
Half?
They lost almost 100,000. They're at 89,000 right now. And loan officers is not like real estate, so they renew in January. So their feeling is the industry may lose another 20 to 30,000 at the end of 23 going into 24. There's a couple opportunities here. One, I know this sounds crazy. It's probably a good time to become a loan officer because the industry is going to get so small in 2024. As interest rates go down, you're going to be able to ride the wave up. My mind just looks for these types of opportunities. I even told my sister, I was like, hey, maybe you should be a loan officer. She's like, the market sucks. I was like, no. You're going to get started right now, and then in 2024, you're going to make money. And I explained that to her, and she goes, well, that's not a half bad idea. Second, are interest rates going to have to come back down? Is the Federal Reserve going to have to lower them at some point? The question is when. Absolutely. Sometime in the next 1 to 3 years, they have to. So at that point, that's going to cause the market to light back on fire, these loan officers to be able to come back, and mortgage applications to go up. So for our investors, for our buyers, what do? You do it now, okay? You do it now while the market is beat up, while there's opportunity, while you can find the deals. For the loan officers, what they need to do, and I'm just having this conversation with some of my Godzilla friends, they are out recruiting other talented loan officers to work for them right now. They're tightening their budgets. They're picking up the phone more. The people who are doing the business are the ones getting into the relationships. Also, if loan applications are at the lowest they've been since 1996 and the lowest number of deals since 1996, are banks lending out as much money?
No.
So that liquidity crunch that we started talking about 90 days ago, 6 months ago, this is it showing up. We've been telling everyone it's coming. This is liquidity crunch happening. The Fed tightened it. The money's draining. Less loans are being originated. What happens to a tide though? Does it go in and out?
Yes.
So right now it's going out, but at some point that tide's going to have to come back in. See, I'm a futurist. I'm a maximizer. So I'm looking at this going, okay, I don't know when the perfect time is to hit the wave, but I'm getting ready for the wave. And we started paddling to be prepared for the wave because we believe sometime in 24 or 25, we're going to get back to a higher level, not 2019, 20, and 21 levels, but probably 2018, 2017 levels. So you need to get prepared for that. If you're a builder or developer, you need to start getting product ready for the 24 and the 25 and the 26 market now. It just makes sense because everyone's pulling back. Thanks for watching today. Hit the like button. Make sure you subscribe. Hey, YouTube recommended you watch this video right here.